Hello everyone, my name is Hannah. Today I will explain how to read a financial statement. Before we read it, we need to understand the definition. Financial statement is a report that summarizes all the business activities of a period of time. In general, most of companies will recalculate their budget once a quarter in a year. At the end of year, they will summarize and audit their budgets and make them as an annual comprehensive financial report. So, what kind of informations can we receive from financial statements? Well, let's change our position as investors. Before we invest in a company, we will collect any informations about the companies we want to invest. As investors, we will find out their revenues, costs, incomes, properties, loans, and so on. So if we want to know more about the financial situations of companies, then we should read their financial statements. So let's get down to business. How should we read financial statements? There are 3 courses of financial statements: balance sheet, income statement, and cash flow statements. Each course can tell us the financial informations from different aspects of companies. First, balance sheets. Balance sheets can tell us how much money a company owns and owes. When we read a balance sheet, we will see the 3 matters: assets, liabilities, and equities. Let's talk about assets first. Assets include the whole properties of a company. For example, like equipment, factories, land, and so on. But here's the problem. How can we purchase equipment, factories, even land for our company? There is no people to invest us. So we need to borrow some money or ask someone or some companies to invest us. We need funds. And where's our funds? Actually, our funds comes from the liabilities and equities. Liabilities include loans, especially loans from banks. Actually, most of companies will borrow lots of money from banks, so they have loans. At the end, they have duty to pay off their loans of banks. But are liabilities so negative and bad to companies? I will answer the questions later. Let's talk about equities. Equities include stockholders and owners' investments. And they put lots of money without duty. They invest lots of money without duties for companies. So they will choose and they will watch, does a company deserve them to invest? And let's come back to the questions I asked in liability parts. Are liabilities so negative and bad to companies? Actually, the answer is not really. Here's the thing. If If there are no liabilities in a company, it means the owners and the stockholders need to afford a whole funds of companies. And that's the situation they don't want to see. No one wants to invest a lot of money and get really less profit. So actually, an appropriate liability can reduce the burdens of stockholders and owners to invest. And having an appropriate liabilities are good at companies and stockholders. Next, income statement. Income statement can tell us if the company earns the money or not. Some people may think that high revenues equals high incomes, but it's not so true. Actually, if the costs are really high, the incomes will decrease. So we cannot just only focus on the revenues, but also we need to focus on the cost. If the cost keep increasing, then the company will lose their money. If the costs are more than the revenues, the stockholders and owners have no profits. The most serious thing is if the company cannot pay off the loans of banks, they will have settlement and costs. Last but not least is cash flow statement. Cash flow statements record all details of business activities. If we want to know how companies use the funds, cash flow statements can provide us more information. I hope this video can help you understand how to read a financial statement. We don't have to be a financial expert, but at least when we want to join the stock market and make investment, reading financial statements will help you to make a great decision on investment. Thank you.